The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the February 8th magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that, when you and I understand that, that means that we can find a gift in every set of circumstance that life is going to toss at us today. You and I, we get to go look at the circumstance of the bulls and the bears, the buyers and the sellers. We're going to go figure out what the markets are communicating to us at just past 1 o'clock in the afternoon. Hope everyone had a great weekend. I want you to know I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648, internationally 727-445-1044 on this magical and magnificent Monday. Of course, this is Tiger Financials Network. I'm Steve Rhodes. Welcome to the show. Right now, we have the Dow trading off 341 points at 15,864. S&P off about 40 points at 1840. NASDAQ Composite down 117. She's trading at 42.45. Russell 2000 down 22 points at 963. The DAX closed off 306 points. The FTSE down 144. How about gold? Up $38, trading out at $11.96. Silver up 58 cents. That's trading at $15.36. Light sweet crude down 92 pennies, trading at $29.97. Lead the charge to the upside out here, dollar-wise. That is a equity. Rand Gold is the leader, up 10%, up $7.48. Sam Adams just slightly behind it, up $6, 3.5%. That's trading at $185.14. Otherwise, looks like nothing more than ETFs on the leaders to the upside out here. To the downside price line, that's off $40, down nearly 4%. AutoZone off $36, down about 5%. Intuitive Surgical up $26, about 5. Amazon down 21. Chipotle off 18. So plenty for us to look at on the downside when we take a look at individual equities. But first, let's go figure out what is it that the market is communicating to you and I. A lot of carnage. There's no question about that. And I think what we need to do, I know what we need to do. We need to kind of flip back between shorts and different time frames. Shorts between charts in different time frames, between some indices, some of the equity futures contracts out here, just to see what kind of potential signals that we have. Now, the real carnage is over inside the NASDAQ Composite as well as the NDX 100. If we start by just simply, now the NASDAQ Composite on Friday was the only one of the three indices that you and I follow when we take a look at the advanced decline oscillator that had closed below zero. Didn't in the down. I'm looking at these three charts here, three panels on the, start from the left-hand side of my screen out here. But of course, today, with the move lower inside the market, we can see that all price oscillators, all advanced decline oscillators, are below the zero line out here. That includes the Dow. Now, if we take a look at these four charts out here, the S&P is on the very right-hand side. It is only the NASDAQ Composite that is below the July 20th swing point. So as opposed to just using this chart here, what I want to do is flip back to my main chart. There we go. Let's put up the NASDAQ Composite. And we can see a couple of things. One, we can see clearly that price is below this swing point here from July 20th. Now, why is that important? Well, first, let's put up a weekly chart. Let me change this to the weekly, then we'll come back to the daily so I can show you what it's doing on a weekly chart. The reason why this is so important on the weekly chart is because, let me get rid of that A to B equals CD here. is because one, the NASDAQ composite had completed a 1 to, I think it was 1 to 1.6. Let's find out. An A to B equals CD to the downside. The daily chart, we can see it on the weekly chart as well. Your A point was out here from the high from the week that began November 30th. Your B point was down here for the week that began December 14th. Your C point was a retracement into the holiday week, Christmas or just after Christmas, December 28th. It made a 1 to 2.618, A to B equals CD to the downside. In doing so, what it also was doing was it formed a weekly hammer candle out here. And price, in the week obviously doesn't, whoa, that was not a good thing. Okay, there we go. The week obviously doesn't end until this coming Friday, but nonetheless, we have price trading below the low of that hammer candle from January, again, the week that began January 18th. That is not a good sign. It's the second hammer candle that we have seen here over the course of the last 4 or 5 months that we have now seen it close below. There was a hammer candle back here on September 28th. Now, look, the meaning of a hammer candle is the market is trying to hammer out a low. When you close below a hammer candle, if you're long, you're wrong. That's the expression out here. Now, what does that mean for the NASDAQ composite as we take a look at a weekly chart? Well, it means that you fall back to the next place of support out here. Actually, so I'm glad I've got the weekly chart. Let me just go ahead and scrunch this. That is a technical term for wanting to get back and taking a look at more data. And what you can see here, let me just do a little bit more scrunching. The green trend line that is on my chart is from the low. Now, when I say trend line, we're just using, in essence, really the bottom of the candle. It's not completely true as we come back here. We take a look at the October 2011 timeframe. But just simply, this is a good enough trend line out here. If we take a look at the low from March of 2009, that price point, by the way, 1268.54. And then what I've used here is I've used the touch point of November 12, 2012 out here. That's the week that began. And so we can see that price is very likely to head down and hit that trend line. Now, where is, and we also have, let me draw this across the screen out here. Let's go ahead and put the bottom of the weekly swing point that it's dealing with, which is back in October of 2014. That was the old Ebola scare. The price on that, let me go ahead and put this on the bottom of the chart out here, make it a little bit easier for you to take a look at. 4116 is the number. So it's very possible. Well, first, it's really probable that what the NASDAQ composite is going to do is get down and at least test that trend line. They may take that trend line out. And we're going to take a look at the trend lines of all the major indices out here to understand just exactly where we are at, where the market is at in relation to those trend lines. So that is, and I can't give you the exact price on that, but we can say it's somewhere between 41.16 and 42.35. It could be actually, when I say 42.31, that's because I believe that is the top of the daily swing point out here, but the top of the weekly is a bit higher. So this is what the NASDAQ composite is clear. Now, what the NASDAQ composite could also be doing out here is forming a very large A to B equals CD to the downside. And so if that trend line cracks and if price gets below 41.16 out here, just taking a look at just some normal tools, what we could do is we could project where price is going to head to. And that projection would say I would still use from the A to B equals CD. I would still use the high of November 30th. Now I'd come down to the bottom of that hammer candle from January 18th, and then my C point is going to be the high of last week. And that would say you'd be looking at 37.33 just straight out of the gate here, the way that prices come off of that C point with a big wide-ranging bar last week with a gap down today. You take out that trend line, and I would say this is one of those situations, which is basically 40% of those situations where the market would make more than a 1-to-1 A to B equals CD. By the way, the 1-to-1, 37.73, 1 to 1.272, 35.38. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee.
See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 349. S&P is off 41 points. So we were taking a look at the NASDAQ composite, which is, the first area that I really believe that we need to focus on. We're back now to the daily time frame chart. And as we take a look at the daily time frame chart, we can see that prices traded back, and it's tested the high of that October 15, 2014 level. That's where the 4231.54 number comes from. Odds favor that if we see the NASDAQ composite close below that level, that's where you're taking a look at a run down to that trend line, or maybe even pushing below that, possibly breaking the trend line. I don't know, but that would be, for me, would be the next target area. And that's to take a look at the NASDAQ. Now, we've got some really good volume inside the market, so we're going to switch over and take a look at the QQQ series ETF, right? So that's the NDX 100 that we're taking a look at. Only in this instance here, we're going to take a look at the Qs. Now, as we pull this back, and I can show you the trend line on that. In fact, I'll do that for you. Let me pull up the monthly time frame chart up here so we can see that green line that's going to show up on my screen, nothing more than the trend line. Now, the trend line for the Qs can be slightly different than the actual indice out there, just simply because of fees and dividends. But let's go back to the daily time frame chart, because this is kind of interesting. As of 1:20 in the afternoon, the Qs have done 55 million. So that says the Qs are on pace, straight line numbers out here, to do somewhere around 100 million shares today. Now, the last time that the Qs did any volume was back on August 24th. That was 150 million. In the India, not the NDX 100, but inside the NASDAQ composite. And I'm just really trying to benchmark volume back on that October 15th timeframe. The volume there was 109 million. I'm just rounding it up, so 109 million. So the last two high, assuming that the Qs continue up with this volume pace out here, we are going to have, or it's going to have, another high volume low. I mean, it's clearly going to do that. The question's going to be, is it going to be 70, 80, 90, 100, 110, 120 million shares? We got enough time in the day for it to be 150 like we did August 24th. My point is that you and I can go back on this QQQ chart. Doesn't always happen the exact same day. Oftentimes it does, is that when we get these high volume days, those are the capitulations. Those are the washout days. Now, that's not changing the long-term picture here, but high volume days inside the Qs are what form bottoms. And we go back and take a look at 2007, 2008, 2009, 2010. You'll see that as a characteristic out there. So why are we taking a look at that? Well, if the NASDAQ composite rejects that swing point, which we took a look at, that price point, let's take a look at it right now so we can put that together. So I'm at least trying to put it together. And we're going to look at some other charts out here. So that's the 42.31 level. If you reject that swing point and we have this high volume capitulation type day inside the Qs, that says, okay, pretty good setup here for a bounce inside the market. Is it 1 day, 2 days, whatever the time frame is? Well, the other element that ties into that you and I just simply cannot ignore is what's the VIX index doing today? Well, the VIX index is up by 14% as we speak right now. It's up by $3.34. It's trading at 26.72. And typically, when you have a 1 day rate of change greater than 10%, you at least see the ES Mini in the overnight early morning hours have a fairly decent bounce out there. All of these factors have to be present at 4 o'clock. It's not really, all I can do is read for you what the market looks like right now at 122. But if any of these factors change here, that's going to change the actual outlook as to what the market may be intending on doing out here. But if we see a VIX index, and I don't know what the 10% numbers, you can do the math just simply by taking a look at what the close was inside the VIX index on Friday, which was 23.38. Take 10%, add that to it, and that would be the number you'd be looking at. So any close above that would give you that 10% reading out there. And as long as you get a rejection of the NASDAQ composite swing point and you get this high volume day in the Qs, don't be what's the word that I would use? Or don't be amazed or something if you were to see some kind of overnight bounce inside the markets. Now, the overnight bounce inside the markets is likely not going to come from Asia, right? Now, not the entire Asian continent is closed celebrating the Chinese New Year. By the way, Happy New Year for those of you that are celebrating out there. But likely, where the market really started getting crushed here today was inside Europe. So let's go take a look at, let's now flip over and take a look at the longer-term trends out here. We'll come back to this slide. I wanted to take a look at what's going on inside of the DAX. So let's go blow up the DAX here. And what we can see is that up until Friday, the DAX was looking pretty good. No, that's a monthly chart. I got to take that back. We're in the month. So I actually, it's a monthly chart. So let's just reverse that statement. Here's what we know in the month of February inside the DAX. Through January, things were just fine out here in the DAX. When I say just fine, if we take a look at just a short-term trend line, that happens to be the red dashed lines on my screen out here, up through January, price had just pulled back to that support level, that trend line. Now we can see that that level has given it up. The DAX looks like, to me, it's on its way back to its 2007 highs. 2000 highs. Well, 2000 highs and 2007 highs. Very likely, it's just simply closed up, by the way, at 89.79. Now, this freight train may not stop. And this freight train inside the DAX may just simply continue all the way down to 81.36 out here. Forget about what we looked at inside the U.S. stock market out here. It looks to me like that's really what the DAX wants to do. You've got a hammer candle down here with the low from the month of October in 2014. That's pretty close to 81.36. Clearly, that was a consolidation. I mean, you could not see a clear consolidation inside the market other than take a look at the DAX out here. Been in a long-term consolidation. That long-term consolidation, I'm referring going back to 1996. Maybe you can go back a couple months, but 1996. And we did not see a breakout of that consolidation until May of 2013. The real breakout occurred because for about 4 months we chopped sideways, or it chopped sideways. But back in September 2013, what happened was you saw a clear break. And that said that the DAX should have gone up to 13,821. Not that it can't still, but because it's broken through a short-term trend line, price is going to fall. Typically, is going to fall back to the next level of support. Well, that's I can see what that is sideways. I can see what that horizontally. I can see what that is diagonally out here, and that says to me that 81.36 is definitely in the cards for the DAX. Now, it has not broken its long-term trend line, so it's a bit stronger than some of the other indices. But the DAX is the only. Well, if we look at this chart here, the DAX and the NDX 100, right? Let's pull up the NDX 100 right now, and I'm going to get rid of the green. Well, the green line happens to be a trend line coming off of October of 2011, and price is basically sitting on it right now. It looks to me, I'm going to go ahead and actually just delete that, because wasn't too sure whether or not the NDX 100 was going to get back to its trend line. We can see it's still strong, even though there's got a lot of problems in Denmark out there. Price inside the NDX 100 likely to head back and test that trend line. Now, where is that? Look, if it is, it's a monthly chart, so if it's the month of February, that's right around the 3750-ish type range out there. And we'll come back. We'll take a look at the long-term trends, at least just for a moment, so you can see where everything is in relation to that. But most of them have failed, but not all, like the S&P 500. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back folks. Before we went to that break, we were looking at the different trend lines. We looked at the DAX. We took a look at the NDX 100. Now, this panel here that you're looking at, you've got the Dow in the upper left-hand portion of my screen. We know that the Dow has broken through its trend line, but it's still just, the Dow is actually, well, the Dow is much stronger than the NASDAQ if we compare it to the January 20th level out there. What we know about the Dow at this stage of the game is it's really just simply been consolidating. Remember, we looked at a consolidation inside the DAX. Yes, it's broken its trend line, but it's also been consolidating since November 2013. Right around the 15,500 level out here. So that is a place of support. We'll call that place of support maybe the low of February 2014. Of course, I don't have a data window to tell you what that number is, but we can, oh, there we go. I've got it up here. So that's the price point. Probably the line of demarcation inside the Dow is 15,340. And if the Dow closes below 15,340, it will have broken that consolidation to the downside. And now we have a price projection, our price projection being 12,819. If that level holds, that should be no surprise to us because the Dow has been in a consolidating pattern. So one possible setup here is you've got the NASDAQ composite moving down to the trend line, the NDX 100 moving down to the trend line, and the Dow actually holding the consolidation lows out here. And until all three of those fail, the preponderance of evidence says that's what the market is doing. We then have another piece of evidence here, the S&P 500, which is the lower right-hand portion of my screen. Let me go ahead and blow this up a bit. And also was really in a consolidating pattern here since May of 2014. But what we're going to use here, because the S&P 500 has not broken its rising trend line, I'm going to give more credit, right, extra credit, special credit to the S&P 500. And what it is likely doing, maybe in combination, so here you could have a four-banger. You could have price inside the S&P 500 come down and test its trend line. The NDX 100 come down and test its trend line. The NASDAQ composite come down and test its trend line. All at the same time with the Dow just simply getting back to the consolidation. That's where you might find some type of buyable bottom out here. All four of those things happen at one time. Likewise, if it's likewise is proper to say here, if all four of those levels fail, it's very clear that it's curtains out here. It's very clear that you go back, that the S&P 500 is likely headed back to its 2000 top, its 2007 top area, somewhere around the 15,500-ish, 1550-ish type area. That would be its message. But at this stage here, we've got indices in the U.S. that are racing down to levels of potential support out here. And that's how I see it when I take a look at the long-term patterns inside of the market. So now let's go take a look at some things that are moving. We can always come back to these areas here. But I think we've nailed it as to what the market is doing, where prices are likely to fall to. And so we've got a pretty good roadmap. Let's go take a look at some other areas of the market, see if we can figure out what they're doing. Now, let's take a look at currencies. We haven't done this here for a while. Let's look at the euro, Japanese yen. And one of the problems that the market has, the real headwind, is the euro, Japanese yen. We can see that this is a daily chart. So it was back on the trading day of January 29th. I'm guessing there was some kind of Mario Draghi comment out there on that day because the currency pair had a fairly wide-ranging-ish type bar. It had wide movement from high to low, that's for sure. It finished really in the middle of the movement there. But that was what price did. This is what's most important because you and I know that the euro, Japanese yen is a carry trade. It's an excellent way to take a look at divergences, directional divergences in the market. And what the euro, Japanese yen did was it hit the top of that trend line, and it just absolutely failed miserably. Now we're seeing it just simply pull back. And the question is, where is it going to pull back to? Well, overnight, it's gotten back fairly close to the 0.68 retracement of its last move up. That's a move up from a daily basis back on January 21st. Remember, we're talking about January 20th when you and I are taking a look at swing points. So there's no coincidences here, right? That was the low inside the euro, Japanese yen. That's why it's important for us to take a look at what this currency pair is doing. Our market's made, in essence, a bottom on January 20th. So everything just following suit here. But the Euro-Japanese yen really stalled out on January 29th up at the top of that trend line. Now it's pulling back. If this, and it's got a wide-ranging bar right now, pulling back into the 0.618 retracement level, 128.52. If that level does not hold, then what we should expect and anticipate is either a full move of a move or a move back to, and I'm going to discount the 0.786 retracement level because at that area, you're already inside its swing point from January 21st, the top of which is 128.19. So if 128.19, if the Euro-Japanese yen closes inside of that, then there's a really good chance that that is headed lower. Now, that really fits in with the schedule of what you and I just looked at from kind of the intermediate longer-term chart with regard to patterns that are out there. So now we add this currency pair to it. And folks, I'm just doing this on the fly. I don't have something that I'm trying to sell you here. I really didn't have any time to look at the longer term charts and said, there's no better time to do it than when we're just simply on the air here. And so you could have now the 5-banger, right? You've got the NASDAQ composite coming back to a trend line, the NDX a trend line, the S&P a trend line, the Dow back to the bottom of consolidation, and then you could have this currency pair moving all the way back down and perhaps holding at the bottom of its pattern that is out here, where it did form a double bottom. Well, I can't really say it was a double bottom. It was a test of a swing point, which was back from April of 2015. So that's what's going on inside that currency pair. The rest of the currency pairs, I don't see any reason for us to spend any time there. Let's go take a look at Goldilocks. We had gold up $40, trading at $11.97. What is gold doing? Well, what gold is doing, let me get rid of, that's a volume profile, which we'll start using, right? We've got our price profiles, our TAS price profiles, and I've got a tool to take a look at some volume profiles to make it a little bit easier, especially when we're looking at some of these future contracts. Now, what gold is doing is gold is trading above the 1191 mark. That's where we have a 100% move of a move. That's where price got back to the October 15th level, which was 1191. It's actually trading at 1197 as we speak right now. Typically, not always, but typically, when prices make that type of a move, they start to get exhausted. But what I can say about the metals, about the mining sector, about gold, about silver, is that all this money that's coming out of the stock market, all the selling, it's going to work somewhere. And clearly, the sector that has been working well off of the lows out here, have been the mining sector. Ordinarily, what we would anticipate is this is an area where price would begin to stall. Now, by stall, I don't mean get bearish on it. By stall, it could just simply start to retrace. It could move sideways. It could pull back fairly deeper than what we think. But right now, it's trading above that swing point. Watch the 1192 area inside of gold. If we see it close back below that today, then that says the market the gold market probably moves sideways to slightly lower. Silver, which is up 66 cents right now, that is not anywhere near its swing point of making a 100% move of a move, which would take us back into the October 28th level. That doesn't mean it's bad. It's just simply not back there yet. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 360. S&P is down 44. NASDAQ Composite off 132. One email that came in asking me, on a shorter-term basis, is there anything that I see where there could be a potential bounce or support? So from a shorter-term basis, I'm going to switch over and take a look at the 30-minute time frame charts out here. We've spent a lot of time on the NASDAQ Composite because I do believe that that's the place where we should be spending time. But we've put a number of different things together. Let's go take a look at the NQ 30-minute as well as the ES. And so we'll start off by taking a look at the NQ. Now, from its high out here, and the high that I'm referring to is one back on February the 1st. From that high, we can see that it has made a 1-to-2 A to B equals CD to the downside. Now, oftentimes when a market makes, but there's several A to B equals CD patterns, so this is not the only one, but that is one of the patterns that is out there. And oftentimes when a market does that, you start to see a bit of a move. I won't draw on all the A to B equals CD patterns, but if we do take a look at one of our patterns that is worth noting always is when price is moving either higher or lower and doing it with less relative strength or weakness. In this case here, we've seen price have been moving lower, doing it with less relative weakness. Now, as price pushed down into the 11:30 time frame, it was that very next candle session where we saw the cavalry, some type of cavalry, try to rush in, formed a nice little bullish engulfing, and we had some additional follow-through on that very next candle session. What we also see here on the 30-minute chart is we can see our TAS market profiles. We can see our horizontal levels of price, support, and or resistance. Well, price never made it up to the support level. That's a problem. The reason why I say that's a problem is because this is a market profile here where the bulls, the buyers, should have at least had the upper hand up until the sniper area of about 39.54, where all the sellers were comfortable in selling price. Right now, price is below the bottom of that box, which is 39.1280. There is so that I see that as a problem as we speak right now. That says 39.13 is very important for the NQ to get above in order to give you who were asking for any kind of support for that to actually occur out here. If I take a look at the ES Mini, let's do the same thing because it also happens to be showing a similar pattern. Now, when I say similar pattern, you can see that whenever price moves higher or lower, it does with less relative weakness out here, which in this case here, the ES Mini was also doing it. It's a potential area where you're going to see some type of bottom bounce area, whatever it might be. Now, as we came in to that same time frame, let me get my cursor out here. As we came in that same time frame at 11:30 this morning, I don't know if that was the same time frame or not, but on the very next trading session, we saw a hammer candle. And if we see a close below that, which it looks to me like the ES is going to go ahead and test that level, may even do it during the next 15 minutes out here, 1827.50 is that number. If you see a close below that, that would be just as we're going off the air out here. It says, the expression, if you're long, you're wrong, means price is going to go down to the next level out here. So we do have a reversing style pattern that is out here, but we have the same thing going on inside the ES as we do inside the NQ. That meaning we also have price below its bullish formed TAS market profiles out here. So that is not good with regard to the ES. We saw, when you see the pattern like this set up, right? You see the pattern, you get a bullish reversal signal, you then have a new set of market profiles that establishes itself. You really shouldn't see the market profiles go ahead and give up on price if there's really going to be some type of bullish reversal. And that's utilizing A to B equals CD patterns. That's using price relative strength. That's using everything. So there is an important message here that says, yeah, we're more likely headed lower than we are where we're finding some kind of reversal. Now, I mentioned, taking a look at those on the NASDAQ, take a look at the TAS market profiles. Now, I have those on my system here, this chart that you're looking at. Let me do this because I can turn something on and off just like this. Okay, so now what I've done, you can see that's the same chart that we were looking at, just with a different trading platform out here. Now, these are the horizontal levels of price stability, if we'll call it that, or fair auction. Now what I've been able to add to this, I was working on this over the weekend, is I have some price profiles. And this is a 30-minute chart, by the way, and I'm just exploding this up so that you can watch us on TigerTV out here. The key level, what's interesting about this is the real key level for the NQ, and where there is the strongest level of now resistance, which could be support if price can get above it, is right where, and we're looking at these blue lines on my chart out here. So this really helps us to understand the volume profile from about 2 o'clock this morning until the low that came in here at 11 o'clock. So it's doing all of that. Now, this is for every trade that's been fed in through the e-signal system, so no dark pools or anything along those lines. But what we do know, and what's interesting, is that our TAS market profile point of control ties right into this volume. I mean, ties right into it, which in essence it should, right? That's where you've got the largest congestion, the largest number of buyers and sellers comfortable at that price inside that fair auction. So that's that 39.2450 level. So what you're really looking for is you're looking for these lows that the market is trading into. You're looking for those to somehow get rejected based upon the 30-minute charts that we're looking at, and then you've got to see a move above resistance. And that resistance is not going to be the bottom of the box. That resistance is certainly going to be the point of control out here, and that's going to be 39.2450. If you get that, then you would expect and anticipate that price will get up to 39.54, and that's where the snipers might just be hanging out. That's where the sellers should be hanging out, where they are most comfortable with is in being able to sell this market. Now, if I take a look at the ES Mini, let's do that. Let me see. I should have that out here. The ES Mini. I've got the ES Mini. Let me go ahead and get rid of one of those volume characteristics. Let's just take a look at the same one. In the ES Mini, it's really clear where that price level is that is going to be resistance. And that's going to be really just, we're going to say it's really the same level, that point of control level. So this is a 60-minute chart. It's a 60-minute profiles that I have on my screen. Why did I do that? I don't know why I did that. Let me put up the, how the heck did I do that? I'll go back and take a look at the NASDAQ, but I thought that it was 30 minutes. But we're going to change it now to 30 minutes. Okay, so now here's our 30 minutes out here. And that really says pretty much just above the point of control. That says really at 1837, that is going to be on any bounce. Expect and anticipate throughout the day here that at 1837, that's really where the snipers have moved down off of the 1846 level, and they're really hanging out at about this 1836 area inside the ES Mini. So I hope that answers your question with regard to short term, what the markets appear to be doing out here. And at this stage, I've got to go with that longer term outlook, where price is just simply going to continue to head down to those trend lines out there. So that's what's going on inside the ES Mini. Let's go take a look at a couple of stocks. Let's look at let's look at Priceline, see what it's doing. I know something else that we can do, though, is we can take a look at some of the sectors and the top 10 holdings inside some of the sectors. So maybe we'll do that to get some type of read on the market. But first, let's just take a look at Priceline out here. Now, Priceline has taken out a low from back in January of 2015. That low was 990.69. The volume amount down at that swing point was $1 million. You've done 720,000. So seems like it's pretty much on pace for similar type volume. Where is Priceline headed to? I don't know. Let's do this. Let's put up a weekly chart and get a feel, see what we can find out here. So Priceline, it sticks out. It sticks out as this high volume weekly bar. It looks like in August of 2012, and the high on that is about $682, and you are at 966. I see some gaps out here that may hold that support. Steve Rhodes with TFNN. We get back. Let's go take a look at some of the sectors, some of the stocks within those sectors, like the XLF, the XLK, maybe the XLV. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Let's go take a look at what's going on inside the sectors inside the S&P 500. Right? We took a look at the trend lines. We know that inside the S&P 500 long-term trend line hasn't given it up yet. Let's go see the top 10. Here's what we can actually do. So the top 10 holdings inside the S&P 500. They're Apple, Microsoft, ExxonMobil, this is in order, Johnson & Johnson, General Electric, Berkshire Hathaway, the B shares, Facebook, AT&T, Wells Fargo, Procter & Gamble. Now, that represents about 18% of the S&P 500. Inside the top three sectors, there are, well, inside of those top 10, there are three equities that are actually to the upside: ExxonMobil, Johnson & Johnson, and Procter & Gamble. Let's just start it off. Let's just take a look at Apple, see what it's doing. Now, okay, so I've got the monthly chart up on my screen here. We can see Apple very likely headed down to its long-term trend line. This is the trend line, in its case, coming off of the 2009 level out here. That trend line looks like price inside that trend line for this month would be somewhere right around 84 buckaroonies. And if we see price close below the August 24th level, which is $92 even, Stephen, you're 93.81, price should fall right down to that trend line. Let's just stay with the monthly charts out. Let's take a look at Microsoft next. Now, Microsoft has got a long way to go before it gets down to its trend line out here. And I've got the weekly and daily market profiles up on the screen, so there's no sign of support here for Microsoft. Let's just turn this over. I'll just turn this over to a daily real quickly, see if there's anything that sticks out here. I thought Microsoft had some fairly large gaps up. Okay, yeah, it did. And that's what it's trading into right now. So Microsoft is coming right back into a breakout area, which is really right around the 47 to 49 level. And the volume there on that breakout was, I'd tell you what it was if I could see it. It is 135 million shares. Wow, really light volume today. You're talking majorly light volume. So breaks out with 135 million. You're pulling back today with 35 million. Even the October 22nd level, where it broke out from, had volume there of 56 million shares. So now, look, you close underneath 48.95. You know, that says you're still going to likely come back to 47.09. Microsoft may be coming back to its breakout area with light volume. ExxonMobil, that's up 66 cents, one of the few stocks that are to the upside out here. ExxonMobil is trying to trade into its most recent swing point. That looks like either the 23rd or the 24th of December out there. They had volume respectively of 5.8 and 15 million. I think we'll go with the 15 million. Wow, today you've done so. What ExxonMobil, actually ExxonMobil has taken out the swing point with volume. How about that? It's trading into November 30th now. November 30th has volume of 17 million. It's done 15. And Microsoft is looking mighty strong. Now, Microsoft, on the monthly basis, we know that price has come down and it's tested its trend line, and it has held that trend line out there. So says to us that ExxonMobil very likely headed to $84.29. That would be the top of its box out there. Let's do one more. Let's take a look at Johnson & Johnson. That is trading up by $1.31 today. Boy, the monthly chart, there's nothing wrong with it. Let's see what this is doing volume-wise on a daily basis. So, look, if we do see, I will say this, if we do see the markets bounce, and you want to play a bounce, it looks to me like the Dow is the place where you would do it because it has held up the best. Now, today, what Johnson & Johnson has done is it's tested its swing point, it looks like, from December 16th, and that had volume of about 8 million shares, and it's tested with 8 million. Very interesting. Hey, folks, stay tuned. Our man David White is up next, and after David, you got the Tom O'Brien Show from 3 to 5. I look forward to seeing you on Terrific Tuesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.